I just have such a hard time sort of wrapping my head around the concept that Berlin and Austin ramping with the latest generation lines, with experience from your failings and your successes, with Tom Zhu, who is the guy who made Shanghai go up in record time, with with record, basically the highest producing factory in all of the entire Tesla network. That somehow is not good for costs. Like, I just have a very hard time wrapping my head around that, right? So that's number one. And of course, like the conversation is, okay, well, how big of an impact is that? Like, how big of an impact is that? But it seems kind of big, right? Because to your point, Berlin and Austin, both of them at full ramp are going to be likely half-ish of Tesla's total production before Shanghai gets to 2 million. So let's call it somewhere between 30 and 50%, depending on where they are on the ramp. That's a very significant part of the equation. And then with Model Y being Tesla's best-selling car by far in 2023, up through the compact car launching, that's likely going to be the case. And it's also likely to be, to your point, not just the highest margin car that they not just one of the highest margin cars that they produce, but likely the highest margin car they produce, especially in places where it's produced in China and shipped to Europe. Like, you have these forces that are starting to take hold that are great for margin. And so, what percentage of the price decrease is related to the passing on the cost savings, and what percentage of the price decreases is related to moving from 1.3 million units per year to 2 million units per year and 3 million units per year. And with the sort of the way the stock market behaves, it's just such a short-term beast. When it's short-term, I feel like that gets lost so easily, because it's like, well, it's supposed to be 22% margin, it was 21, or it's supposed to be 26, but it's 25. So stock goes down 20%, right? It's hard to separate noise from signal in these environments. Yeah.
Yeah, absolutely. I think you're exactly right. And let's not forget the products themselves have actually been redesigned to be lower cost. For example, we've seen them take out the radar. We've seen them take out the 12 ultrasonics. All of these things have cost, not just the cost of buying the ultrasonic sensors, the cost of adding an extra production step, paying that worker to sit on the line and put those sensors in to test those sensors. You've got a software engineer, a firmware engineer in the back end who's integrating those things. All of these things add up. Things like, for example, the passenger lumbar on the 3-in-Y, the brakes, the things like that. They've made changes to these products that have actually made them a lot more efficient to make. We've seen those leaks of the new Model 3, which, by the way, I think looks totally sexy. I can't wait to see them unveil that. But from what we've heard, the rumor is that it's using at least the same rear underbody casting as the Model Y. So now they're going to be moving a lot of those Model Y efficiencies over to the Model 3 as well. So they're not just sitting still and saying, oh no, the economy is bad, we got to cut the prices. This is a company that's been innovating for years to bring the cost down and down. And I think you really hit the nail on the head with the stock market being so short-term focused. And it's really just about, okay, what's the gross margin? Is it 20 or 25%, or is it 30%? This quarter in Q1. And nobody's really thinking about the fact that what matters for Tesla is to dominate the market, to kill ICE, right? I mean, that's just so myopic to say what matters is really making 25% versus 20%, rather than long-term convincing everybody that, oh, wow, why would I buy anything other than an EV? Because it's a lower monthly payment, and then I save on fuel, and then I save on maintenance. They're doing the exact same thing. I mean, this is the mission: accelerate to sustainable energy. And some people think that the mission and profits are actually incompatible, but they're actually not. Because if you can accelerate the transition to sustainable energy, if you get everybody buying electric cars, using clean energy, then who profits more than anybody from that transition? It's Tesla, because Tesla is the clean energy and transport company. So they can sell, a record number of cars at lower prices. They can spread the word through word of mouth, and they can also, I think, make record profits. I mean, we were talking about FSD, privately in the DMs, and this is going to completely change the way that people use cars. Right now, it's still relatively early, it's still relatively basic, but the way it's trending, it's going to be able to drive better than a human. And so, as that happens, I think the whole business model around cars is going to change. It's actually a Trojan horse to sell them a relatively affordable car. And then you get them hooked on these software services where you're really making a much higher margin. So I don't think it's incompatible at all. I think you could see Tesla really bring down prices, not just with the Model 3 and Y, but with the next gen platform that's going to be made in Mexico and elsewhere, and continuing to push the price down while actually posting record margins of, I think, between 30 and 40%. It sounds crazy, but if you look at FSD, it's and other software services like insurance and stuff like that, it's actually not that crazy. They have a pretty good path to not only making the products more affordable, but actually increasing their profits at the same time.
Yeah, that's such a great point. I often think about how Tesla's high profit margins on their vehicles at this scale in the millions of cars per year, it's almost like an accidental thing that Tesla has stumbled upon, which is a sort of marriage of Tesla's ability to create a very unique product that's significantly better than the competition, and the competition saying, not yet.
Yeah,
And
basically.
it's like, it's kind of weird, right? And so that's why they've been able to command these, up to 32%, whatever their peak was on the gross margin. And so it's a result of that. And I think the investing community, right or wrong, whatever the dynamic is, I think they've become very comfortable with the idea that Tesla could and should be able to generate 25-30% margins. And I wonder how much of that dynamic is sort of given birth to the ideas around, well, Tesla has to keep its brand prestige and they have to retain really high margins. This is how they do it. And they have to advertise to retain those high margins because, otherwise, it doesn't make any sense to lower the cost of the car. It has to be done this way. But it's, and I get that. Like, listen, it isn't investing. This is the stock market, and profits are profits. And in the end, if you're a public company and you're going to sell your stock, you have to take care of your investors. I get it. Like, I'm not saying this is good or bad. I'm just sort of making a commentary on the dynamic. But what's very interesting about the point you just made is that you can have your cake and eat it too, in a sense, because flooding the market at volume is what will enable you to turn on the switch on the software that nobody else has. And lowering the cost, unless I'm thinking about this incorrectly, you tell me this, how you're thinking about this, that seems like the best way to get your product in the market, so that when you turn on the software side, it's like all of a sudden you have billions of dollars coming in at 100% margin. And Elon's talked about this openly, right? So it's just such a fascinating time in the company's like history arc. It's like this transitional period. Would you agree? It feels like a transitional period today.
Absolutely. I think the very nature of what this product is, of how people get around, it's changing profoundly in a way that sort of mimics other technology revolutions. I mean, if you look at sort of the early days of the phone industry, you had a situation where you would get the phone for free just to sell the service, right? And often today, you get the phone subsidized by the carrier as well. So they're willing to do that. They're willing to buy you $1,000 phone because they know that it's going to keep you subscribed, paying every month for the expensive data service, because you can't use the phone without that data service, right? But it kind of brings you back to the original iPhone. When it launched, it was $600, and people said, "Hey, this is way too expensive for a phone." Phones were given away for free back then. And then when they came out with the iPhone 3G and they said, this is going to be available for $199 carrier subsidized, that was when things just took off, right? And you have to remember, it was actually a very similar situation to today. The iPhone launched in 2007. By 2008, 2009, we were deep into a recession. So hitting that affordability really mattered. And it's what made the iPhone such a success today. Now, once people were hooked onto the iPhone, Apple was able to actually come up with a strategy where they had several different phones. where you could get the base phone pretty cheap for, I think they've got the base phone for $400 or something, or you can go all the way up to the Pro, the top end, for $1,000. So it didn't actually compromise their ability to sell products at the high end. And now they've got a variety of products at that spectrum. And it's a similar thing for Tesla, sort of pushing affordability and getting the products out there. It may give you a short hit in gross margins in the short term, but it's going to give you the ability to continue growing, to continue being the number one volume EV manufacturer in the world, rather than surrendering that title to BYD or somebody else who goes lower cost. And ultimately, it's going to serve them well. I mean, like the Tesla cult, right? That's what people always say, the Tesla cult. People get in these Teslas and they go, oh my God, I love this thing. I want to buy another one. I need to get one for my wife. I need to try FSD. I need to get Tesla insurance. I want to get a Tesla shirt. Hey, let me get some solar for my house. So,
we're just a bunch of cultists, Omar.
Yeah. I mean, you get the products, you love them. You tend to buy another one. You tend to tell your friend, right? So it's a very powerful thing, just making them affordable and getting the word out there and just making it so competitive with a Toyota Camry that it just makes no sense to buy a Toyota Camry. It's just a very financially poor decision. And I think that's a very powerful thing. And it's only going to increase. I mean, with this next generation platform that Tesla is making in Mexico, I think we could really see them get a product out at $20,000 to $25,000. And at that point, maybe you can actually refocus the Model 3 and the Model Y on being a more premium product. Because right now, the Model 3 and the Model Y are the entry-level product. So it actually makes sense to expand a little downward, start tapping into more of that mainstream market. And then as the next gen platform comes in, that can come in as the entry-level model. Then you could maybe add more features to the 3 and Y designed to be sort of higher end, take advantage of the premium nature of those products, and sort of, have your cake and eat it too that way. People who can't afford anything but the cheapest model, they'll get that. And the people who have a little more to spend, they'll go for, some of those extra features that might be in the 3 and Y at the time.
You hit something there that I still feel is not well understood by some folks, is that the volume piece of it. It seems like Tesla and maybe BYD, one could make the argument, they're really the only ones that are able and have the capacity to make electric vehicles at scale, meaning in the millions of units in the upcoming year or two. Nobody else has that capability. And so that's the one variable. And then the second variable is doing so profitably, right?
Yes.
In the like the arc of auto manufacturing, the affordable cars, the affordable anything, forget auto manufacturing, with really anything. The high volume stuff is usually the low margin stuff, right? The TVs, you make a trillion TVs a year. It's like 1% margin or whatever that margin is. Toyota Corolla ain't making 20% margin. That thing's making like 2%, 3% margin, right? And the Kia Soul might make 0.5% of margin, whatever that is. But that's sort of the dynamic. It's hard enough to make something that's mass market. Then you have to make it mass market so that people like it. And then you have to make it mass market so you can actually make money on it. And I feel like people still don't understand that Tesla is the only one that has all three. They can do all of those things right now, today. And I wonder if that's, I guess there is a little bit of faith that has to be put on the company to be able to execute that, because it's just one of those things that's never been done before. And it's extremely difficult. It's definitely not a given. But I think with the company's sort of reputation and how they've been able to execute in the past with super lofty goals that seemed impossible, I wonder if that is just being completely dismissed and it's more about, well, show me first and then I'll give you credit for it kind of thing. Whereas maybe folks that are close to the story assume that as a given because of what the company has achieved thus far. How do you think about that? Because I'm curious to take your thoughts. Like, do you feel like the Tesla's ability to execute is discounted still to this day? How do you think about that?
I do think it's underappreciated, the position of competitive strength that Tesla's in. Tesla is really the only company in the world that is making money on pure electric vehicles. I mean, BYD is a little bit profitable, but about 50% of their volume is plug-in hybrids. So my guess would be that most, if not all of the profits are coming from the plug-in hybrids, and the BEVs are probably money losers, which is why their profit margin comes up pretty thin. But I think they're headed in the right direction, certainly. Ford has reported an EBIT margin on their EV business of negative 40%. So this is a big deal. When you can make money selling an EV, you want to sell as many as possible, because the more you sell, the more money you make. When you're losing money on EVs, you don't want to make any. And that's why you have GM making 2 Hummer EVs last quarter. That's why you have
Hell yeah.
that's why you have Ford selling even fewer EVs than GM, if you can believe that. And the reason is because they're losing money on every one. And Ford posted a net loss of $2 billion last year. Jim Farley said, hey, look, I'm frustrated. Investors are frustrated. You're heading into a recession. Interest rates are high. It's not really a time where you want to invest into making tons and tons of EVs that you're losing money on. Ford makes $10,000 on the F-150 gas-powered version that they typically sell. They sell it for about $50,000 on average. They make about $10,000 in gross profit. Now, on the electric side, they sell that same truck for $40,000 was the price they originally offered it at. Now it's significantly higher than that. But they sell it at a lower price in some cases, and they actually lose $20,000 on it. So why would you want to take a product that you're making $10,000 on and say, hey, buy this electric version instead, where we're going to lose $20,000? So it's a big issue. They're all coming out and saying, hey, we're all in on EVs, because they don't want to look like they're being left behind. But it really masks the reality that there's an enormous amount of work to do before you can make a good EV that people like and actually sell it profitably and produce it.